Good afternoon, everyone. This is Anthony from Market Chart Watch. Today we're going to be looking over the implied move that happened today on April 17th. Happy Thursday to everyone. So as you know, we're going to have a short trading week this week. It's a 3-day weekend. Got Easter coming up. And so let's take a look at the move that we've had over the past 2 weeks. And I've basically taken all the indicators off of the SPY chart, the S&P 500 index that we're all going to trade on. And we're just going to kind of piece some things in here to look at what a likely move or a higher probability move will be in the upcoming days and weeks. And then we'll actually set up a form of a trade idea. Now, keep in mind that any of these trades that we do set up, typically I'm going to set these up with options, but we can actually set these up with buying the underlying stock or the equity as well. That's totally fine. So we'll talk about that though in a future video. So number one, I just want to kind of bring up some of my favorite points, and those are gap fills. Okay. And so what I mean by a gap fill is, let's kind of bring this just into the last like 5 days. Oops, let's delete that. And so if we look at the last 5 days, again, there's not too much info on this chart, but if we look at the after hours trading, in some of these areas, you're going to have what's called a gap. Okay, so we have a gap fill from overnight trading. Sometimes these happen intraday, like this big move with the news on the tariff pause. And so we'll actually use these areas. I'll take the difference between the two. Let me zoom in on that and make sure it's correct. And we'll actually take the difference between both of these. Let me space it equally, because you want to get these just right so that you can get your limit orders and stop losses in. And we'll kind of stretch these across a couple of days, okay? And so the reason I like to put in these gap fills is because these are areas where price loves to move in and out of, okay? So like this is another gap fill right here. And I'll stretch that out over the same period of time, just a couple of days, so that I can see on the future days what certain trades will look like. Okay, and we can obviously put in the one from a few days ago with the tariff news. This isn't a gap fill, this is just a really large move. Okay, and I'm just going to fill in again to the same thing. So this is getting a little convoluted, but just work with me for a second. Okay, I just want to show you just a basic principle and idea. So with these big gap moves, two things are going to happen. The stock price is typically going to work off of them in some sort of support or resistance, depending on where they are. And once they break through, they love to make their way into them by at least 50%. Okay, so at least 50% of the move of the gap fill. So you can see the day after that tariff news, we did not test that resistance of this gap fill. We had a down day, and once we made our way into that gap fill, we bottomed out 3/4 of the way. Now let's actually take a look at the candlesticks, and let's bring this into a 15-minute chart, because I actually want to show you some interesting information about this. Okay, so let's bring this all the way back. Take a look at how this gap fill worked perfectly. Do you see how we gapped into the gap fill? And then as we try and make our way back up, we meet resistance exactly where that gap was. And then after hours, we meet resistance again exactly where the gap was. And then the next day, we met resistance initially, broke through, retested right at that point, and then traded here. This little move, I wish I could, I don't even know where the flags are on here. I would like to flag this. This is actually one of the highest probability trades there are. This breaking above a gap line, retesting with support. This is a high probability trade right here. Okay? So that's one reason why I love these gaps, is because they are such great forms of short-term resistance and support, depending on where we're at. And so let's take a look here. Once we broke out of this value gap, again, the profit was incredible, right? We had like a 1.5% move right after that. And so that was a high probability setup if you were to take that trade. So again, we went after hours and we looked here and we saw we tried to break through this gap fill, resisted. Break through this gap fill, resisted. Broke through, didn't go to the top. And once we know that we don't make it, we know we're going to bottom back out of this, okay? And we know that typically when you have these gap fills, you're going to want to either break into them or break out of them. So again, these are great areas to kind of put our stop losses or our limit sell orders, depending on which way we want the trade to go. And so that's my point. You see how we're kind of beanbagging back and forth or pinballing in between these fair value, or not fair value gaps, but between these value gaps. I'm not going to call it a fair value gap because it's technically not that. Okay, so let's peel this back just a little bit here. And I'm actually just going to get rid of it for now. Okay, so you can see that this was one of our most recent gaps. And then last night, so this was a couple hours after I posted my last video, we had yet another gap fill in after hours trading, and we're going to have to get really close in to see what that looks like to make sure it's perfect. Like so. I'm just going to extend that out so I can see it better. Like so. Okay, so you can see we're going off the last candle wick here to the first candle wick here. So this is after hours trading, and this is pre-market trading. Okay, so we had a pretty large gap fill here to the tune of almost 1%. And so what have I always said is that intraday, right, the day of this gap fill, the market is going to try and fill in that void or break out of it in some form. And this is a classic example of what happened today. So let's use our arrows to sort of indicate that. You can see that pre-market, we're trying to break in and out, kind of unsure. And then you can see that the market was trying to go in either direction. And then what happened? We broke down and out. Okay. And if you looked last night, I had actually set up a trade on this sort of movement. Where did it go? Let me see here. I'm trying to find where my order tab is. There it is. So we shorted this by saying once we break out of this channel and we meet the previous or the pre-market, or this was after hours resistance, that's where we wanted to sell. I actually did on that candle wick. And then for here, I brought our stop loss to the top of that candle wick. So we're playing on the after hours trading, and we initiated that order right here. And so what you can see was we had a trade where this candle wick sent us into obtaining this order. Okay, so this order triggered. And then on this next candle, the trigger continued on until we broke out, and then our order sold right there. Okay, so that was a 23% return on investment for that order. And so you can see how these technical indicators can help you set up intraday trades like so. Now, the other obvious trade for this would have been once we broke back in, or if, right? If we broke back in, we would expect at least a 50% move in the upward direction. And so what actually happened was we had a almost 100% move with a retrace and then went all the way. And so this would have been a phenomenal trade had I still been on the computer. This would have been a high probability trade because, again, once you break back into those value gaps, you tend to stay in them until you meet resistance on the other side or support on this side. And so look at how this pinballed perfectly. Pinball, barely broke out, pinball, pinball, and then my assumption will be, unless we have another gap fill in pre-market Monday morning, we're going to pinball again until we have a large-scale breakout. But which way is that large-scale breakout going to be, you ask? Well, let's paint a little bigger picture here, okay, over like a week-long period. I want to show you a trend that is forming. if we knock out this value gap and we say this was about our highs, we have a couple of touches on this point here. So just give or take. We have 1 touch, 2 touch, 3, 4, 5 touches on this area. And then if we take a look here, and let's bring this to the hourly chart because this is a little better. Oops, delete that. Okay, stay with me. So you can see that this candle offers basically no support. I want to go off of the bodies for the most part of this. Let's bring that down a little bit. So I guess the wicks are going to work in this instance. And if we look at what's forming, we have a ascending triangle for the most part, okay? So this is typically a bullish trend because the highs are remaining the same, but the lows are getting higher. So you have higher lows, higher lows, higher lows, higher lows. So this is basically going to go like this. This is going to pinball up like this, down like this, up like this again. So it's going to continue to retest until it consolidates so much so that it has to then trend in some direction, and that trend will typically be to the upside when you have a move like this. So it wouldn't be uncommon to see this thing continue to either consolidate or just start a breakout, unless we have some news, you know, CPE, CPI, tariff data, whatever the case may be, something to then send this lower. And if something were to send it lower, we can obviously buy put contracts to play this downside, and that would be a pretty great payout at 33.72 basis points or 6.44%. Okay, that's 6% move on a trade that would be that in the money. Let's just call that a 75 delta. That'd be a $2,500 move on an options contract that might cost you $800 to $1,000 at this given time at the market conditions. So you'd basically make 300% on this trade. Okay, so you can play the downside obviously with the options contracts, and we'll talk in future videos about setting first trigger, second trigger, and third trigger OCOs to set that up the way that I do. Okay, so that's kind of the move that I am looking at in the future coming weeks, is going to be that further consolidation. But in terms of the next daily charts, I'm going to see us probably stay within this value gap and either reject here. So I'll just draw a quick line. We're either going to reject here, or we're going to reject here. So I expect in just the next few coming days, we're going to see price action kind of move more so like this in small scale picture. Okay, or even like this, smaller scale picture. And so we can set up our trades to warrant that. Again, we're not going to set up trades this early. We need to see what after hours trading is doing fully and the pre-market data is showing. But that's basically what we're looking at today on this fine Thursday. This was a great trading day. And the implied move was, to me, pretty obvious. And that's not always the case. So anyways, thanks for watching this video. Like, share, and subscribe if you want to learn more about it, or if you're confused, because we're going to break these things down into easier, lighter, more manageable details. And even if you're not big into the whole options trading platform, don't be afraid. A lot of this is going to apply to equities, ETFs, stocks as well. Anyways, thanks for watching. We'll catch you on the next video.